Good morning. Please let the summer be over. This market, I'm not going to say the word, but you know, it's terrible. Good morning. Good morning. So, yesterday's big bullish gap up. Awesome, Pat. $1,200 yesterday. Nice. Big gap up above a red bar. Historically, that pattern would have resulted in a move above at least this bar's high. Nada. It sat there all day doing nothing, looking like it was going to go up, looking like it might go down, and just ended the day where it started. Look at that candle. I mean, I could look and see exactly, but just eyeballing it, the open and close are almost the same. They're tighter than they were 3 days ago. So, this bar said, hey, lower, look to fill the gap. Didn't happen. Gap up above the high. Look like it's going higher. It doesn't. So this morning, well, markets are up here a little bit here, but still going nowhere. But it looks like it's going to go higher, but who the heck knows? It has to clear this high. It's got to clear that high to get into the void. And, I've said this a few times, this market is waiting for news. Whether the Fed, please do something to save the day. Mr. President, please, backpedal a little more. China, do whatever. And none of that's happening. So it's August, people are away, so on and so forth. So we shall see. That's where it's at. Qs, pretty much the same story. At least it took out the high, but open and closed the same, going sideways there. Weekly trend is up, but it's a grind. So really nothing happening here. It's neutral. It couldn't take out the prior week's high, but it's in the upper part of the range. So we'll call that slightly bullish to neutral. Diamonds, just still the same thing, sideways, and really not much to say there. Transports went up and came down. Sellers were lurking up there and pushed it back down, but couldn't even take it anywhere into the prior day's range. So, neutral again. Same story everywhere. And the Russell, up there, same story. Couldn't take out the high. And it closed below its open, a red candle. And you can see here, the moving averages are starting to converge. The 50 is still up here, but the 20 is coming down over the top to meet the 200. And, while moving averages are as subjective as any other line you can put on your chart, if you don't know how to use them, well, I don't care if you know how to use the oscillators. They're not any use to put on a chart. Let's leave it at that. You didn't wear an MT Live yesterday. We'll get the replay out for you. But these converging moving averages are a visual aid to suggest, or really not to suggest, to say that the ranges, the volatility is contracting because a short-term moving average is catching up with a long-term moving average, and them coming together. The message is that the spring is getting wound and that it's getting closer to a move, hopefully. Now, the 50's up here, and, you still have to clear the price resistance because ultimately that is what counts, right? Clearing the prior swing high, which is where sellers took control and, and knocked it back down again. It couldn't go up to really get things going. But when you see a picture, and I've only got one moving average on the weekly, but let's assume that I had 3 there, and they were all intertwined between the middle of prices. I mean, you can see that it's going sideways, but that's another picture of using moving averages as a visual aid to say prices aren't going anywhere. This is a commission generator, pattern, frog in the blender, whatever. And so this is what we have going on here, right now, is that, nobody has any confidence that, hey, it's going to go up, or, Fed's going to save the day, or they're not. and think prices are going to go down. So everybody's kind of waiting here on the edge of their seat, waiting to see what the heck is going to go on. So looking at the futures, a little gooder, better perspective, still up here, trying to move up through that resistance area. So this price action is bullish. And, it came down hard. We've been able to recover 100% of the big down bar, which is positive. And when it tried to go down, it couldn't. Right? Green bar back up, bar by bar analysis. Right? Still neutral, but overall bullish price action. This is the idea of, bullish price action, absorbing the supply. I mean, here's the supply, the resistance, and it's not going down, but it's still not breaking out. So ultimately, they're trying real hard here, kind of running in place as the battle lines are drawn, and we wait for this thing to move. Should it go to the 50 MA on the Russell? I don't know what it should do. I would say if it starts moving up above this area, then that would be the obvious place, which is in alignment with this prior swing high. So ultimately, what we're interested in is prices, not moving averages, but moving averages, especially on an index, on a daily chart, are very widely followed by institutions. And they're simple moving averages that are used. So if we look at, our charts, right, we've got this high up here, which will be an area of resistance on the hourly time frame. And I assume that's it up here. That'll be dealt with, which is the 20 MA is right there. So we're just waiting, let's see if it can get past, 3 days ago, and we'll take it from there. If it can get above there, it's got room to run. So for us as intraday traders, if it starts perking up through here, we can go long. You guys that do the spreads, you might want to sell put spreads that are below at least this low over here, and see what shakes out. Q's, same story. Chop, chop, chop. You can see what's going on here on the hourly chart. We still got a couple of days to go here, but, while it's green on the weekly, it's still below last week's high. Right? So in our advisory letter, we wrote, for anything meaningful to happen, it's got to get above that high or get below that low. And anything in between is just gyrations. At least the gyrations happening at the top here. Now, that's positive. That is sideways at the top. However, think about what's keeping it up there at the top. Buyers, which means they're anticipating it's going to go up. So that is creating either a launching pad, or it's filling the tank for a nasty move to the downside if it breaks below this level. Yeah. So the interaction between buyers and sellers here, obviously there are sellers. You can see the red candle, which said, hey, it's up at resistance, right? Get on board for it to go down. And it didn't happen. And they just stepped up again and they held it. And so now they've got another shot today to see if they can turn the day red and how deep they can get into this area. And so as going sideways up here, it's saying that buyers are stepping up more aggressively, absorbing this supply. But if they lose it and they blink, well, then it's like if you and I, and let's say all of us as a group, we're on the bullish side and we're buying. And you say, hey, Greg, what do you think here? Well, I'm still buying. Right. And all of a sudden we see that red bar growing, and all of a sudden it's down to here. Greg, what are you doing? Well, I sold some. Say, oh, shit. I better sell some too. And then it starts to, unfold on each other. And all of that buying now turns into selling. And that's how prices get driven to the downside, where sometimes I say, why did it go down? Well, because it didn't go up. And that explanation of what I'm doing, what you're doing, what others start to do is, the reasoning behind a pattern that everyone's looking for some indication of why, meaning, oh, your stochastic rolled over or the MACD gave a sell. That's why it went down. No, it went down because it didn't go up. Right? So, we all look, right? Most of us look for these reasons based on some technical analysis why prices move up or down. And some of that, there are reasons. Well, it hit the 200 MA on the daily chart and everybody knows that's there, and it dropped like hell and they bought and it went up. So sometimes some common sense works out really well. Yeah. So same story here in the Dow, chopping around up in this area of resistance. Everybody's kind of waiting for something to happen here. Here's the Russell, and we like this. I like it a bit better. First of all, it's got a cleaner void here. It came all the way down. It was the weaker bottoming tail bars. So many times what had shown relative weakness can show relative strength because it's already been beaten down. And whereas the ones that have shown the strength where they're still at resistance, they have a more selling up there. Whereas this coming down as hard as it did, it's got the larger void. So this could be the better opportunity here, especially intraday, before it reaches this resistance area up there. I wouldn't count on volume very much, Barrett, as something meaningful. Right? The markets have gone up on lower volume for 10 years now. Oil still just chopping around, just chopping back and forth here, topping tail. Look at the closing prices if you can visualize them. Up, sideways, just going nowhere there. Sellers lurking up above, buyers lurking down below. The spring is winding up again. Bonds are down here, so that's a plus. That's a plus, a little plus for equities because, they want to see interest rates go up and alleviate the nervousness of the yield curve inversion and the Armageddon that's coming, supposedly, when that happens, and maybe it is. We'll see. But it's not breaking any significant support, so not really all that meaningful other than for like we've been doing here day to day this week. And I said it at the beginning of the week, day trading, unless something significant happens above or below last week's low, high and low, I don't think much is going to happen here. But if this starts to break lower, well, that opens up the door to those futures popping higher. And gold continues its consolidation. It's still bullish. It still looks good. Got a little ahead of itself, but just bullish price action, consolidating its gains, still looks good. Silver, as mentioned a couple of times, up against resistance here. So it makes more sense when it also had that wild, crazy day there. And so far, it's just going sideways. And, when you see those crazy days, either condense the data, right? Go to a higher time frame where it'll make sense, or just kind of look at it, visualize it on a closing basis. And you can see it's just chopping back and forth there. And you don't need any indicators to figure that out. Not even a moving average, but you can see higher highs, higher lows. Overall, it looks good. And so simplification is our goal at Master Trader, to get rid of the squiggly lines for all of you and see what moves the market. And that is buyers and sellers and the pictures that we look at that communicate to us the direction of future prices. All yours, Nan. No cuts then? Cuts meaning Fed cuts? I don't know. I think if the Fed doesn't cut, Alex, I think if they don't do something, and probably if they do a quarter of a point, it's probably sinking ship for a little while.
All right, good morning. Yeah, when I was watching the news, the woman Fed governor, she said she dissented on even last rate cut. Wow. Or maybe it was in the minutes or whatever, I don't know. All right, weekly options trader. Workday gapping up a little bit. We tightened the stop and we covered half at 20 cents. Tesla, we entered yesterday on this afternoon breakdown, and it closed kind of flat. Had a bullish gap this morning. I don't know what's up with that, but I like the fact that it's selling off now. Apple, we did a put spread yesterday morning on the bullish gaps. So that's fine. It's for Friday, ticking ice cube. And Amazon, same thing. We did a put spread. It's gapping up. That looks great. And spiders, same thing. Bullish gap yesterday. We did a out of the money put spread, the 290s under Tuesday's bar. Today's Thursday. And then when we were breaking down in the afternoon, we legged into a condor. And now it's gapping against us, so I just set an alert. We'll use a 5-minute high. And that's it in the weekly swing ladder. We have a bunch of positions. I counted them this morning because a subscriber asked how often we do things. Aqua, long stock, he's on probation with yesterday's bearish engulfing. I would have legged into options, covered call, but there was nothing that made sense. C block, we have a covered call. That looks great. CNC, we have a bear call credit spread. The CBO, I gotta check that to see if that one's, if we are long stock or not. CPB, we're a long stock and we legged into a covered call. Cross, same thing, legged into a covered call. Sold the out of the money 55.5s yesterday for Friday. Dish has just been a dog. We're just gonna let it play out and see if we get lucky. The gaps up or something. EDU, we have a put spread, looks good. ENTG triggered late afternoon yesterday. Long stock, that looks good. Echo Whiskey, covered call. See, and we did it right into yesterday morning strength. We did it at an absolute perfect time. FLT, we have a put spread and a covered call. Just bull call debit spread, so that's just a mildly bullish option trade. Newell, we bought stock yesterday. That looks great. Ring, we did a put spread on the breakout for September. Ruby, long stock, that looks great. SJM is on probation, but we purposely gave a big stop because it's a bottoming pattern. SRC, we're long stock. Twitter, covered call, that looks great. WDC, covered call. See, and it's perfect. It's just chopping around sideways, so the covered call lowers our cost basis. ZTS, covered call. That's it. Opens. Gappers here, a couple of retails. W Whiskey, 121. It's a bullish gap, but it's in a downtrend, gap into the high end of this. So that's junk. Synops, 134. Okay, here's a beautiful put spread candidate. All this swapping around here is building support over time. Got some big green bars, red bars ignored, and it's gapping up in its earnings. So that's a definite put spread. Postage, 15 bucks, way the heck up here, so no setup. LPLA, I can't tell where you're gapping, but that was earnings also. Yeah, trader, it looks fantastic. Lima Bravo, 1870, that's a bearish gap, still looks lower. It's a bearish weekly and monthly. And we'll go through my other lists from yesterday, my long list. So McDonald's here is on my long list, and it's gapping up, what, 85 cents? TTC, I think had earnings, but we know we'll come back to him Tuesday. Oh, it's a little Ruby Tuesday. He's having trouble. CTRN, I don't like the way it trades. You're going. Pearl, 4221. This is the EKG heart machine again. Look how crazy this trades. But now it's a bullish gap up. I don't know if it's optionable or whatever, but 30-minute high, that's a put spread idea. You could probably sell the 40s would be ideal, maybe 40, 50. These JWM 2880, it's gapping way the heck up here, so no pattern. Bravo Julia 2475, gapping way, that's a bullish gap. It's just not high quality. Wooba 53, so it's gapping down to here. I don't know what that's going to do. Splunk 124 area. Bearish gap. Let's see what happens within the first 30 minutes. GSX 1760. It's a bullish gap to all-time highs. That's a bullish pre-market, but it's getting far from the 20 now. Said G 83 bucks. Bearish gap, but no pattern. Keys 90. It's a big gap. 94.50. Way the heck up here. Wow, look at this. The weekly is kind of a big, a monstrous reverse head and shoulders. See that right here? I mean, usually the heads are not this deep, but it still is one. Left shoulder, head, 100% retracement, right shoulder. So we'll watch that on a pullback. DKS 3550. It's way up here. Now, if this one, hypothetically, we're gapping to like the 34, then that would be a tier 1 gap because of this price void. But now 35.50, it's way the heck up here. RTRX 1212, that's a big old bearish gap, nothing to do. This is just a carryover, one of mine, bullish consolidation, strong, daily, weekly, monthly. And that's it. These are just all leftover things. So my favorite gapper for a put spread is this, Synops. Let's look at the other longs that I had on my list yesterday. But Synops doesn't have weeklies. Shoot. But we can still play the time decay volatility contraction game. We can maybe look at the 125s, 115s. 125s closed at 220. That's pretty juicy. Way down here. These were some leftovers. Yeah, Ba had a nice continuation yesterday. CGC is on my short watch list. KMX, it's garbage, but under yesterday's low, looks lower. SPG is a dog that looks lower. VNO is a dog, it looks lower. This one, this is a nice descending triangle. I like this one. Someone on YouTube asking about work 30. Yes, I like it. It's on a downtrend. This is sideways, declining 20, and it's gapping up to 30. It's gapping right over here. Now, ideally, we would like a much bigger price void as opposed to these overlapping bars. But yes, it's a bullish gap. So that's step one. Step two is, let's see how it sets up intraday. I'll put that on the bottom right here. That was Cree though. Remember, Cree was a beautiful gap trade yesterday. Look at pre-market. Wow, that was, see, my two-step process. You had a bearish gap on the daily, you had a price void, and you had a bearish pre-market, and you had a bearish first 5-10 minutes.